Всем спасибо большое, что пришли. Я сделаю небольшой интро и расскажу, собственно, кто к нам сегодня приехал. То есть моя задача, если кто не знает, я занимаюсь партнерствами и в недавнего времени занимался фандрейзом. То есть 3 месяца назад мы, как, по-моему, рассказывали, подняли большой раунд. Слышно? Вот, так лучше намного. То есть мы подняли большой раунд. И один из основных инвесторов — это Insight Venture Partners из Нью-Йорка. Также в раунде участвовали DRW Venture Capital и Jump Capital. Значит, к нам познакомиться с командой и в целом рассказать о трендах в индустрии, про финтех, собственно, приехал Пол Szurek. Он Vice President at Insight Venture Partners. Он у нас теперь в совете директоров тоже, то есть помогает всячески с ростом компании, с будущим направлением. И вот он приехал со всеми с вами познакомиться и ответить на ваши вопросы. То есть мы сегодня весь день обсуждали, так что извините, если мы немножко вареные. Ну вот, он в целом расскажет. Второй, к сожалению, Lonne Jaffe, тоже очень умный парень, не смог приехать, к сожалению, из-за проблем с российской визой, потому что, видимо, ее очень почему-то трудно получить. Он к нам, он присоединится попозже, у него есть определенные слайды и рассказ, он через Zoom. Мы покажем его удаленно. Пол немного расскажет, потом Lonne расскажет, и это все будет на английском. Я переводить не буду, иначе это будет очень муторно, затяженно. Вот, потом будет возможность задать ему интересующие вопросы, их я буду переводить. То есть я буду тут, если что. И, собственно, все. Поехали.
Bonnie, can you hear me?
Yep. Well, you can say a few words, and we'll fire up on.
Hi, can everyone hear me? Does this work? Is that better? There we go. Hey everyone, I have no idea what Stan said in that introduction, but it sounded nice, so I'm excited to kick things off here. My name is Paul Szurek. I'm from New York, Insight Venture Partners. We're a venture capital, growth equity, and private equity fund based out of New York that's been around since 1995. Really, over the course of those 2 decades, have grown to be one of the largest and most prolific investors, purely focused on growth stage software across the world. So last month, we closed a fundraise for our 10th fund, which is about $6.5 billion, and is the fund within which TradingView is part of, as far as our investing goes. And so really excited to be here in Rostov this week to spend some more time with your team and hopefully meet a lot of you while we're here. My partner Lonne Jaffe is going to be zooming in from New York over video. Really sorry he couldn't be here. Unfortunately, his Russian visa was declined last week, so that's just normal friction of doing business between U.S. and Russia these days. So anyway, when we get Lonne up there, he will dive in, I think like Stan said, to a short slide presentation that's going to be much more insightful than anything I have to say, frankly, diving into some of the observations that we at Insight have around the fintech, the artificial intelligence, and blockchain and cryptocurrency markets, if you will, as well as kind of how TradingView fits within all of that. But I'll start out just briefly, kind of reiterating who we are at Insight and why we believe that there's such a strong and exciting fit for us to work together here with you at TradingView. Insight within the ecosystem of technology investors really comes in to partner with businesses where we see a couple key things tapping into big market opportunities. And those key things, whether you're at TradingView or elsewhere from kind of the Rostov tech ecosystem, I think might be informative just in understanding why what you all have built here with Dennis, Stan, Konstantin, and the team is so special and unique. The first thing we like to see is a big addressable market. And what TradingView provides taps into so many different areas of finance, investing, research, as well as just communication and collaboration more broadly that really speak to, I think, the exciting advantages of building towards this future of a global, connected, and mobile world where just the sharing of information and knowledge can be super fast-paced, as well as really, really deep in terms of the insights that you draw from that data and that analysis. And I think you can see, the activity on your community is a testament to that. Second thing that's really important to us as investors at Insight is having a great team. I can feel a lot of excitement, in this group around the vision of TradingView and the remarkable success that you've achieved so far. And firstly, let me say, this is one of the most unique businesses that we've come across during the course of 2 decades of investing in internet and software businesses. I think the quality of the product, the way you've grown, and really the powerful community that has built around your platform speaks to just a tremendous amount of commitment, as well as creativity and innovation that is just a huge credit to all the work that you guys do here. So again, extremely excited to be here and meet more of the team and spend time with you in Russia. Lastly, where Insight tends to invest is in businesses that we see as having clear-cut product market fit. And we have certain ways of measuring that in the numbers, and actually I'll go ahead and thank Alex and Andrew for their patience with us during the diligence process and surfacing all that insight for us. But more broadly, what we want to see is a business that is ready to scale and is in a position to take advantage of some of the resources outside of capital that Insight has kind of cobbled together over the course of the past 2 decades. So our firm, like I mentioned, just raised a $6.5 billion fund. In total, we manage about $23 billion. We're 140 people based in New York. Almost half of our headcount is within our portfolio team, which we call on-site. I think Lonnie might dig into the details here in a little bit more depth than I will. But to keep it high level, we are excited to partner with TradingView because we believe that not only on a standalone and organic basis does this business have really exciting room to run in front of it, but I think Insight in New York, given some of our resources and our network, is in a really good position to help think through what the big bets might be for us to really build towards a home run here together. And I think, frankly, this is something that over the next 3 to 5 years could drastically change the way that investing in financial research and collaboration is consumed and distributed across the internet in both the consumer retail segment as well as perhaps the institutional one. So it's a really exciting opportunity, and we're glad to be here today. I guess with that, I'll turn it over to Lonnie to dive into the slides. And again, I hope to see you all more after this event and later this week. But thanks so much.
Hey, can everyone hear me at all? How's the audio?
Hey, Lonnie, can you hear me?
Yeah, you're loud and clear. Can you guys hear me as well?
Yep, we can hear it just fine. You're a little bit quiet, so Andrew, yeah, he just took care of that. So can you see us?
Yeah, actually I can. Thank you everyone for coming. It's great to connect with you virtually. Apologies I couldn't be there in person. As Paul mentioned, the visa rules changed mid-application process, and so that was bad timing. But it's great to get the chance to connect virtually.
Absolutely. Thank you so much for taking the time. You've got maybe 100 people here. Andrew, how many we have? Yeah, about 100, I'd say. Anyway, you got people from TradingView, you got people from some other companies. They're all eager to hear a little bit more about Insight, about you. So whenever you want, just take it away.
Great. And can you see my presentation in slideshow mode, or is it showing as the other screen I can swap?
We see it in presentation mode, so we see your first slide and your second slide.
Perfect. Great. So this slide is actually already a little bit stale. We actually just closed our 10th fund, as Paul mentioned last week, and announced that closing. But Insight is one of the largest tech-focused growth investors in the world, and the growth stage where Insight typically invests is a stage of company that's a little bit later than what's traditionally referred to as venture capital. So that the companies are past the experimentation stage. The businesses are clearly working. They can absorb not only capital, like significant amounts of financial capital, but also other kinds of help productively. So what I mean by help are things like we have experts, dozens of experts with skills like marketing, sales, product management, technology architecture, who are working with our 130 plus portfolio companies to help them with everything from how to open up new offices in other parts of the world, with how to design a cloud delivered software as a service product in a way that's cost effective, how to do acquisitions for companies that haven't done acquisitions before, various things that companies need to be able to do as they start to really scale up with market leading products. And then there's other infrastructure in place that can help portfolio companies. So things like the Insight Ignite program, which has relationships with thousands of key decision makers at large financial services institutions and other types of customers across the world. So it allows us to make connections to sort of bring to our growth stage companies the kind of relationships that previously were only the kinds of things that large multinational corporations could resource sufficiently. And so we because we're so substantive and we have well over 100 companies in the portfolio, we can provide a lot of that infrastructure to the portfolio companies. And so at the growth stage, the companies typically can benefit from incremental capital, but also those kinds of help, right? Because they typically have the best product or one of the best couple of products in a given category. And it's enterprise class, or if it's more of a consumer-oriented business, it's already demonstrated real global traction, and we're ready to step on the accelerator and drive the companies to the next level. There's an even later stage that's sometimes referred to as private equity, which is often more focused on generating profits and returning capital to shareholders. That there are other software funds that focus at that layer, but we tend to focus much more on the sort of mid stage. So the companies are still growing very rapidly, 50, 75, 100% per year sometimes, and maybe even more, but are still at the growth phase of their existence. And it's been a very successful strategy over the years. There's been over 40 IPOs, including just over the last few months, companies like Pluralsight, Smartsheet, and well more than 100 strategic exits where companies have been acquired by large, typically multinational corporations, and even sometimes other investors. So I wanted to talk a little bit about a couple of topics that are potentially relevant to not just TradingView, but other companies in the ecosystem. And it gives a sense of sort of how we think about our investing strategy. And so two topics. One is artificial intelligence, and the other is cryptocurrencies and blockchain. And there'll be a slightly different perspective on each of them. I'd say we're much more cautious on the cryptocurrency investing than we are on artificial intelligence. And then part of that is driven by the phenomenon that in the growth stage investing, you need to have real companies that exist that you can invest in. And there's just a lot more of that today in terms of using real AI technology to power companies. But one sort of macroeconomic phenomenon that's happening, that's sort of driving a lot of changes in the technology industry, and it's actually impacting other industries like financial services and retail as well, is that a lot of the traditional companies that were previously had unassailable or insurmountable advantages in the market are shifting to a different phase of their existence where they're actually going into secular decline. That is, they're starting to lose the ability to really do things, and they are not investing, and they're starting to sort of change their strategies, whether consciously or unconsciously, to more of a wind down strategy. And there's a number of things that are causing this, or that seem to be playing a major role. One is the fact that the best products today are being built by growth stage companies, and this is related to the second driver, which is that the investor base in the growth stage companies has a much longer term time horizon. And so and there's a couple of exceptions in terms of large companies. Some notable exceptions include Amazon and Google, who have actually built up investor bases who are actually willing to let them invest over longer term time horizons, but they're the exception. So by and large, most of the large companies have curated investor bases or created investors or attracted investors who are saying to them, basically, we don't want you to use our money to make investments in new technology. We just want you to give us our money back. And then we can invest in companies like TradingView via Insight Venture Partners in another part of our portfolio. We don't need you to do that for us. Another driver that's sort of interrelated with points 1 and 2 is that talent, which used to be really hard for growth stage companies to find, is easier than ever to find. And growth stage companies are able to attract talent with more interesting work environments, more exciting missions, often higher compensation, and even in some cases, equity that gives you meaningful upside associated with the success of the business. And it used to be that you couldn't really find good talent that was locked away in large publicly traded companies. But these days, everyone puts their resumes up on the internet using systems like LinkedIn. And so it's very easy to discover the best talent. And there's for technical roles, there's GitHub and platforms like that where you can see the caliber of programmers. And so it's just easier than ever to find the best talent. And so the talent wants to work for companies that are actually building products and are resourced to be successful and have longer term time horizons and better products. And so that all becomes, it sort of feeds on itself, and it sort of is vacuuming up talent and financial capital and the ability to really get things done from most of the existing incumbent technology vendors and bringing it to the growth stage. And now the growth stage companies, as a result, are able to potentially build up what we sometimes refer to as demand side economies of scale. So the traditional type of scale power, it was always better to be the scale leader, especially in a technology business. If you're the largest vendor, you can invest in research and development and marketing, and you can take those fixed costs and you can distribute them over the most revenue because you're the biggest. So that was always better. But recently, there's been an emergence of another kind of scale power, which is on the demand side. So probably the most well-known of these are network effects. So if you're a multi-sided marketplace like Uber or Airbnb or eBay, or a social network like Facebook, if you can become the largest player, you might have an insurmountable advantage because everyone wants to be on the network that everybody else is on. But there's other kinds of demand side economies of scale besides network effects. So things like machine learning and artificial intelligence. So when I say demand side economies of scale, I'm using it to mean anything whereby your product gets better the more people who use it. So if more people use the product improves, that's a form of demand side economy of scale. And machine learning has the potential to generate that as well, because as you potentially, not in all cases, but in many cases, if you generate more data, your product can improve. And then your product being better means you get more customers, which means you get more data. And you can have the kind of long-term advantage that, say, like Google has with Google search. And AI is particularly interesting as a form of demand-side economy of scale because it actually started working fairly recently in the grand scheme of things. The algorithms have been around, in some cases, since the 1940s and 1950s. many of the most successful machine learning techniques today had their origins in the 1970s. But within the last 10 years, things really started to kick into gear and work to a degree that is surprising even the deepest practitioners in the space. To the point where some of the stuff that machine learning systems are able to do is pretty magical, almost. And that's been pretty game changing. The basic concept, as many of you are likely familiar, is that the old model was that humans would write all the software. And in the machine learning kind of AI world, you have a system whereby machines write the software. People don't call it machines writing software. They call it machine learning models being trained. But really what's going on is data is going in, and then models are getting trained, and then software is coming out that does something, ideally something useful. And the number of things out there that are starting to work that are powered by like real operational AI, this list is dozens of pages long. This is just a assortment of some of the things that have come up recently. You'll see we're invested in a company that can use machine learning to determine whether papers are plagiarized or original. It's an education software company. We have another one in our portfolio that detects payments fraud. Spam email is basically went from being a huge problem to not a problem as a result of AI-powered systems. We're on the cybersecurity side, which I'll touch on briefly. We're invested in half a dozen kind of AI-powered cybersecurity companies. That's an area that's working surprisingly well. We're using it. We have a project going on for internal use where we're using AI to suggest potential companies that are growing really rapidly, pulling in data from the public internet and from paid data sources and a variety of other places to just give alerts to our team that, hey, maybe you should take a look at this company because it might be growing really rapidly. We have another portfolio company that can do a better job recommending prices for loans than typical rules-based systems. And we just announced an investment in a company called Tractable that can rival the best human experts in terms of estimating the damage the cost of repair for an automobile based solely on the pictures and some of the structured claims data. So you could look at a photo and estimate the damage. It's called Tractable. It's based in London. And the list goes on. I mean, you're seeing large companies that are the companies you can count on one hand that are still able to do things even though they're large, like Netflix and the like, who are using AI to pre-cache streaming TV content the way Amazon will deliver packages to distribution centers because it can anticipate that you might order the item. And obviously recommendation engines have been used for a long time, but they've started to get fueled by support vector machines, kind of nearest neighbor type algorithms to really supercharge recommendations of which YouTube video would you like to watch next, or which show would you should we suggest to you. If anyone saw the Google Duplex demo that came out a few weeks back, it was a fairly impressive display of a computer pretending to be a human and making calls to restaurants and to hair salons to make appointments. And it was clear that the humans on the other side of the conversation didn't know that they were being called by an AI. And it was surprisingly human-like in terms of it had like ums and it was able to talk and deal with non-native English speakers on the other side of the line. So the list goes on, and like translation, image recognition, anything that involves deviation from the norm analysis and sort of pattern matching of what kinds of things have worked in the past and therefore what's likely to work in the future are all categories that are working strangely well. Except actually, there's one mistake on this page: the distinguishing chihuahuas and muffins. That's actually not something that the computers are able to do yet. That one's pretty hard. There's also a lot of theater that's going on. The machine learning, and I don't think we've seen a single investment opportunity over the last let's say 6 months that hasn't claimed to be using machine learning in some way, but a lot of it is just theater. It's not real AI-powered models that are being trained. And in other cases, you also have a phenomenon where it's a thing you need to do. You need to train models, but it doesn't actually give you any real economic power because anyone can do it. It doesn't require very much data to have your models trained up to be as good as they can get. So you really need to understand the curvature of the training and whether it's a thing that can absorb large amounts of data productively or only a small amount of data. We've been thinking about this in essentially 3 layers. So I'm just going to go through the 3 levels quickly. The first level are platforms and systems where you build machine learning systems. So you build a machine learning application on top of these platforms. And we actually invested in one called Alteryx, which was very successful. It IPO'd last year. But in general, this layer is very, very hard to be a successful company in. And it's also hard for us as investors to invest in this layer because the best technology is actually being built by the large consumer internet companies like Google and Facebook, and then made available as open source. So systems like TensorFlow. And so if your business model is to be a software company that sells software, it's like we give you software, you give us money, but you have a product that's not as good as TensorFlow, which is free and getting better more quickly, it's just a really hard layer to be a business. Not impossible, it's just very challenging. And you have very little demand side economy of scale other than maybe people build a lot of applications on your software. The next layer up, we've actually been very excited about. And these are cross-industry turnkey AI capabilities where the AI-powered application works across all of the industries. So things like cybersecurity, fraud, compliance. And these are great because the customers are actually very happy to give you the data. They don't. It's not proprietary to them. They just want to get herd immunity. That is, they want to get the kind of antibodies from the other companies whenever there's an attack. Fraud is another example. We're seeing cross-industry fraud applications where machine learning systems are dramatically better than either rules-based systems or human experts. Cybersecurity is probably one of the most important secular growth opportunities in software in the last 20 years, regardless of its potential value as an AI application. But as the required skill of attackers goes down and the sophistication of the tools that attackers use go up, you're starting to see demand for AI-powered cybersecurity solutions to be more responsive. And we've been basically trying to invest in the AI version of each cybersecurity category because most of those are better businesses in addition to having better products. So for example, Darktrace for network monitoring, it'll create essentially like an immune system for the enterprise. It'll learn things like what's normal and what's not normal. And then if you get attacked, it can quarantine the attacker with a product called Antigena. And then also it can share information about the attacker with all of the other customers via Darktrace. Cylance actually does very similar things, but instead of network management, it's doing endpoint management. So it's sort of the AI version of antivirus. And then Recorded Future is like the same kind of idea, but for scouring the dark web. So going through all the dark websites and looking for information about your company that maybe people are selling data or passwords. And so you want to use an AI-powered system to constantly look for threats like that are out in the dark web, which humans wouldn't be able to do. And then the third layer are the industry-specific use cases. So something that's like insurance claims adjudication, like I mentioned, or in the case of something like a company like TradingView, it might be sort of a financial services specific powered application. And in this layer, it becomes hard again in the sense of, as a software vendor, if you are trying to sell software to a customer whose business is who's looking to use AI for an industry specific use case, it can be hard because the customers want to do it themselves. And often they can. So if you're big enough and you have scale and you can attract high caliber talent, then you can just use your own data as a customer to build a turnkey healthcare system or a telephone system or self-driving car capability. But there are some areas where the big vendors are just so legacy that they need to buy something. And so this is a really interesting area, but it's a little harder again. So it's not, level 3 is not as easy as level 2, but it's still a really big focus of ours. And we've made a number of investments in this level, including Tractable, the insurance auto damage company that's AI powered. I mentioned Precision Lender, which does the same thing for pricing loans, sort of recommends pricing of loans. So that whole layer is you could pretty much go through most categories of software application and do the AI version of the thing, and in many cases it's a good idea. And as this phenomenon of demand-side economies of scale continues to become more and more important, this may actually accelerate the adoption of public cloud platforms like AWS and Azure. Because if you can solve the privacy challenges, which is in many ways a technical problem, then you would like all the customer data to be in the same place so that you can train models. If the customers are all managing their own software at their own location, then it becomes a lot harder to get the benefits across all of the customers of the AI systems getting trained. So it's a quick high level on AI and why we're excited about it. I wanted to talk a little bit about blockchain and cryptocurrencies, which is at least as relevant to TradingView, just given the company's lead in the space and how much attention and focus it's been getting. I would say in general, our position here is cautious. That is, we're being patient. Our view is this is a marathon, not a sprint, and it's still in the very, very early days of infrastructure build out. And so a lot of the companies are either pre-product or at least pre-traction. And some of them are not even really companies. They're more like kind of open source networks that haven't completely figured out their commercial business models yet, or maybe won't ever have a model whereby there may be a token that fuels the system, but the token won't necessarily go up in value over time. So there isn't really a thing to invest in. But I suspect many of you are already familiar with this, so I won't spend a lot of time explaining how blockchain and cryptocurrencies work. If of course you don't know about them, there's no shortage of information available on this topic, and it's pretty interesting. So in many ways, it's easier to learn about than other topics. But the idea is blockchains, which are being used in systems like Bitcoin, have managed to create a phenomenon of digital scarcity and in many cases unstoppable transactions that are censorship resistant, in that there isn't a central third party that you can shut down or that you can go after. And so there's a highly distributed infrastructure that can create digital assets that you can own using a bearer asset, which is typically a private key. And if you can keep your private key safe, you have, and potentially even memorize it, in some cases with special heuristics, you can keep large amounts of what are currently worth reasonably large dollar amounts worth of cryptocurrency. And you can keep an asset like a cryptocurrency or a digital kitty, and you can have it as a bearer asset that doesn't require any physical space. And it's a pretty interesting technology. It touches on macroeconomics and psychology and cryptography and software platforms and open source and so many aspects of the technology and economy that are interesting. And an unbelievable amount of capital has been flowing into the space. And it's sort of hard to wrap one's mind around how much money some of these systems have been raising. But to put it in, EOS raised $4 billion. It wasn't at a $4 billion valuation, which would still be staggeringly large, but it was actually raising $4 billion. Similar with Telegram and 1.7 billion. Filecoin was able to raise over $250 million over a very short period of time. And a huge amount of capital that's flowing into the space actually has an effect on the world, right? So the companies that raise this money can use it to do things like hire people, sometimes invest in other companies, even do acquisitions potentially. Although a lot of the things, the sort of drivers for why you might want to build a cryptocurrency or blockchain-based system are frequently not there in a lot of the companies that are raising significant amounts of capital. So many of them are doing, blockchain theater, which is similar to the AI or machine learning theater, which is just basically putting blockchain or cryptocurrency on an idea. They find a problem. The problem is actually a real problem that needs to be solved, but the blockchain doesn't really help with it in any meaningful way, or it doesn't need a blockchain. It just needs a database of some kind. So the kinds of things that are actually useful as sort of thought points before one would decide to use a cryptocurrency or blockchain-based technology is, does the thing really need to be censorship resistant? Do you need unstoppable transactions on a distributed network? Because if there is a government entity or a nonprofit or a consortium that can set up the thing, like a food traceability initiative or something like that, it might be a lot easier and less complicated and faster and less expensive and more reliable and more secure. Another question is, do you really need either privacy or extreme auditability? Do you need the ledger to be transparent, or do you need the transactions to be anonymous, or is it actually worse for them to be anonymous? And then how do you? The third is do you actually need the absence of a third party? Does not having a central party really benefit anything? And fourth, is it a situation where one of the existing incumbents really isn't providing a solution to a problem? And finally, is it a scenario where you will have each of the participants who are participating in the network, does it make sense for them to benefit financially from running the system? So I'm going to go through 4 ideologies pretty quickly here that are perspectives on the space. So these are, people who are often very intelligent and very knowledgeable, who have gone deep into the space, have come to different conclusions about how things are going to play out. And I'm just going to sort of go through an overview of 4 of those philosophies. This is my taxonomy, so this is not intended to be an exhaustive list. And I realize many people's perspectives don't bucket very neatly into one of these categories. But the first is sometimes referred to as no-coinism, often in a derogatory way. And the idea here is that all of the cryptocurrency things and blockchain technologies are a bad idea, essentially, or not going to work. Most of them are just workarounds to legal systems and regulatory frameworks. Many of them are ways to work around securities laws and try to raise money from people, whereas it would otherwise be illegal to do so. There's a question of, is a given token a security? And there's all sorts of inputs to that decision, like whether it was mined, like Bitcoin, or whether there was an ICO, an initial coin offering. But most of this regulatory framework is still in the very early days of being worked out. Many of the cryptocurrencies and blockchain platforms, this perspective would say, are really just solutions looking for problems. And they would point to the fact that, in some ways the technology has been around for 10 years and there don't seem to be very many usable applications yet. And so where are they, right? And so over time, you would expect at least 1 or 2 valuable applications to have emerged, either business to business or consumer applications, and they don't seem to exist yet. So why is that if it's actually useful? They're having a lot of scalability challenges. Transaction fees are very high. A lot of the real world use cases are either crime related or sort of crime at their core. So ransomware and things like that are enabled as a result of the various technologies that you have in the cryptocurrency space. And then there's a tremendous amount of miner concentration. So you have the miners sometimes people will say there's 7 to 9 people who control a huge percentage of the miner capability in the world. There's a tremendous environmental impact. So in some cases, they're using more energy than entire countries like Iceland. And so, you'll put them in places where there's a lower cost of energy, but that doesn't always solve the problem entirely. And then smart contracts, there's a lot of discussion around smart contracts as a thing that can be really interesting and transformative, but in many cases, the things that people are trying smart contracts around only really make sense if you need a digital bearer asset. So there's for example, people will talk about identity, but if you have an identity system on the blockchain, where is your identity being stored? Is it on your cell phone? And what happens if you lose your cell phone? Who resets the private key? And if there is a central party that resets the private key, then why would you need a blockchain in the first place? Why doesn't that central party just run the system? Things like that. Or in the case of escrow, there's a challenge around when do you release the escrow? It's not just a mechanical problem around the rules for releasing it. So then ideology 2, this is often referred to as Bitcoin maximalism, and sometimes Ethereum is put in the same basic bucket. And this idea is that Bitcoin makes sense and is actually working and has been around for a while, and has been battle tested, and there's been splits from sort of the core, but the core technology has actually been very resistant. It's managed to retain its value reasonably well. It's down from its highs, but it actually has well over $100 billion worth of sort of captured Bitcoin value. Some people sometimes refer to as market cap, although it's not exactly a market cap, and has proven to be resistant to censorship. It's hard to shut down. It's not completely tested whether the governments could shut it down. I mean, it's possible that if it was made illegal, it would be much less interesting for people if it was truly illegal to possess it. But so far, it's proven to be fairly censorship resistant. It's behaving a little bit like digital gold, so a thing that has a store of value that is, if it is going to become like digital gold in the medium to long term, one might expect it to be sensitive to real interest rates. And it can be relevant in places where there are oppressive regimes, where there's a less of a respect of property rights, and where people want to store their value in a place that where there isn't a lot of inflation. On the Ethereum blockchain, there have been a whole ecosystem of what are referred to as ERC20 tokens, which are essentially a fundraising mechanism for people to raise other cryptocurrencies. So it's proven that at least is a use case. And also on Ethereum, there have been digital collectibles like CryptoKitties and some video game assets that have proven to be kind of interesting as like an immutable asset, almost like a digital baseball card that people infuse with emotional value and then collect. And it's because it's a unique asset, that's a thing that you can possess with your private key. You can imagine it being this sort of high value asset that can be transferred across the world without having to actually send a physical thing. And there's an array of layer 2 scaling solutions that are emerging on top of Bitcoin. So things like the Lightning Network, which could help to, they tend to be less secure, but higher performance. But the nice thing about that is it could allow the Bitcoin platform itself and maybe Ethereum to scale better for things that are not quite so you could use that sort of core network as a way to transfer large amounts of wealth, but then there's a layer 2 system which can be used for smaller micropayments or smaller transactions. And so why would you need all the other tokens? And there's a view from Bitcoin maximalists that pretty much everything else that is described as a blockchain opportunity and all of the other tokens should just use Bitcoin because there's real network effects there. So why would you want another token? Like if you go to a carnival and you could buy tickets to use the rides in a carnival, but you could also use dollars in the carnival. Why would you not just use the dollars? There's no reason. And so same people have the same idea around Bitcoin. It's like if you want a cryptocurrency-based system, why would you not just use the most popular cryptocurrency?
Hey, Lonnie. Lonnie, can you hear me? So sorry. So we actually have a next speaker in about a few minutes or so. So
okay, great.
I don't know if you need to go into each point in as much detail, but here's a question for you.
Yeah.
Are these slides going to be available somewhere, or is it just is it your personal thing?
No, we can make them available. Yeah, the other two categories, which you guys are probably familiar with, are just every blockchain gets its own token, and then the sort of blockchain, not cryptocurrency world that's publicized by IBM and the like. But yeah, would of course be delighted to share the slides, and thanks for giving me the chance to talk. Sorry for going a little long.
No, Lonne, it's absolutely. Can you turn? Is it kind of cracky? Yeah. No, we really appreciate it. Thank you for taking the time. It's actually a rare opportunity to hear a full, I guess, detailed thinking into AI and crypto blockchain, especially coming from you. I'm not, to be perfectly honest, I'm not sure how much of that audience caught because it was pretty detailed, and I'm not sure about the level of English. But what I'm going to do is, well, we're going to have a recording of this, and I'm going to answer some questions about this afterward. And if the slides are available, that would be absolutely awesome.
Great. Thanks, Dan. Yeah, I really appreciate it.
Lonne, thank you so much.
Likewise, you as well.
Thank you.